Hey guys, in today's video we are going to see introduction to corporate finance. Let's go. Let us look at the definition first. What does the definition says? The efficient and effective management of finance by a corporate body to achieve its objectives. Right? As a corporate, I have a list of objectives which I have to achieve. In order to achieve my objectives, I need to effectively and efficiently manage my finance. Right? So corporate finance is efficiently and effectively managing the finance to achieve the corporate's objective. What are the various financial needs of a corporate? Promotion of new enterprises, administration during the early development, accounting problems connected with the distinction between capital and income, rehabilitation of a corporation that has come into financial difficulties, choosing the best funding mix of their operations, satisfying the expectation of their investors. Right? If I start a new business, I need promotion. And for promotion, I need a lot of money. So that is what the point number 1 says. Point number 2 says administration during early development. Yes, being a startup, especially during the early stages of development, is not a very easy task, right? I have to get a lot of money for administrating during the early stages. As a financial manager, I should be able to properly have a distinction between the capital and income. Capital is the cash I have in my hand that I have put into business. And income is nothing but the revenue that the business has generated for me. If I do not account them properly, then I will end up in trouble. So that is what the point number 3 says here. Point number 4 says rehabilitation of a corporation that has come into financial difficulties. Any corporate can go to financial difficulties, right? In order to come out of the financial difficulties quickly, we need to generate a lot of money that we need to put into the business. Choose the best funding mix of their operations. As a financial manager, I have to take a decision how much amount of money I'm going to get from the public in the form of equity, in the form of debenture, or I'm going to reach any other financial institution and get money by getting loans. Right? So that is what point number 5 says. Last but not the least, satisfy the expectations of the investors. Right? Being an investor, if I go and purchase some shares of a company in the stock market, I would always expect the value of the share to go up and not down, right? Ultimately, my aim is to see profit and not loss, right? If I run a business and if I go to the public and get their money, I should always try to satisfy their expectations. Right? In this slide, we are going to see what are the job of a corporate managers. Being a corporate manager, I should understand how to value the investments accurately. Choose the best funding mix for the operations. Satisfy the expectation of the investors, understanding the corporate decision making. Being a corporate manager, I should choose how much amount of money I have to invest in each asset classes. Right? To run a company, I need lot of assets. Right? I have to properly choose the asset and I should know how much amount of money I have to put into each of the assets. If I'm going to raise money from public, I have to know what is the best debt equity ratio that I'm going to maintain. How much amount of money I'm going to raise as equity, how much amount of money I'm going to generate as debentures. All these things as a corporate manager, I have to keep in my mind. As we saw in the previous slide, the ultimate aim should always be able to satisfy the expectations of the investors. We should always produce profit for the people who have put money into our business. We have to understand the corporate's decision making. Whatever the financial plans that we are going to do should always support the decision making of the top management. We should not go against the decision making of the top management. In this slide, we are going to take an example case study of a tennis ball manufacturing company. So what are all the assets needed by a tennis ball manufacturing company? Land, labor, machinery, last but not the least, managers, right? So as a financial manager, I have to put money into all these asset classes. Land I need for running the factory. Of course, I need labor force, machines and managers to manage the people. There are two main parts of corporate finance. One is allocation, the second one is financing. Allocation is nothing but deciding how much amount of investment I should make on the assets which are used for running my business. And financing is a way of finding the money for the business, right? To say it in clear picture, the meaning of corporate finance is cash invested on asset should always be equal to cash raised. If it is not the case, then we are going to get into financial trouble. The objective of corporate financing is to maximize the shareholders' wealth, get high return on projects and ensure the cheapest financing. Evaluation of investment projects is based on the discounted cash flows, balance the economic interest of all the stakeholders, right? As I said, if I invest money in a company, I would always like to gain profit and not loss, right? So as a owner of a company, I should always try to maximize the shareholders' wealth. I should always try to pay him good dividend on regular basis. Then only the people will trust my company and put money on my company. I should always try to get highest return on the projects and ensure the cheapest financing, right? That is the objective of every business. I have to put less money as investment and I should always try to get maximum returns. For getting the maximum returns, I should choose the projects wisely using several techniques like capital budgeting. Evaluation of investment project is based on the discounted cash flows, right? I have to evaluate in what are all the projects I'm going to invest based on the cash flow that I'm going to receive in several period of time. Balance the economic interest of all the stakeholders, right? I should always take into consideration the interest of top management, the employees of my company, people who are putting money in my company. I should always try to satisfy all the economic interests of all the stakeholders. So guys, in this video we saw introduction to corporate finance, its definition, financial needs of a corporate, functions of corporate managers. Taking tennis ball manufacturing company as an example, we saw what are all the assets in which we have to invest, what is the real meaning of corporate financing, what is the objective of corporate financing. Hope you enjoyed the video. Thank you and goodbye.